Hello and welcome to Core Finance. I'm Matt Brown. I'm joined by Shaun Richards from Not a Yes Man Economics, and we're going to look at the Bank of England ahead of the meeting next week. Strong GDP number, or stronger than expected GDP numbers. We talked about that in a previous video. What now for Mark Carney?
Well, for an unreliable boyfriend, it poses quite a few questions what's happened today, because there's a lot of things at play. But if we just step back for a moment, if we look back, and of course for a Bank of England rate rise we need to look back quite a long time because it's a decade now, traditionally they've moved on GDP numbers, so there's a factor in it. This has been also true to some extent of the cuts that we saw, and then more recently saw, not actually on a GDP number, expectations of last August. So there's a bit of an issue because he put out that they were sort of expecting the economy to do a bit better. Well, that's what we've seen this morning. In which case we could see a rate rise, and then there's a sort of, what did he use at Mansion House in 2014? Sooner than markets expect, now he's saying in sort of in the next few months, that sort of thing, which a lot of people have taken to mean next week. So now he has some backing for that. Now where this comes into the sort of interesting phase is, until today's number, some of the other reports have led the other way. If you start from a base that he said it, and they meant it, so that a bank rate increase for next week was nailed on, then there were a couple of weaker numbers on the way, but also some members indicated that they weren't against it. When the person who used to be at Her Majesty's Treasury, Mr Ramsden, spoke to the Treasury Select Committee, he hinted he'd be a no. And this week we've had Sir John Cunliffe speaking again and sort of vaguely saying there'd be one, but again opening a lot of doubt as to when. So again, we got two no's, and where the two no's come up, obviously that's not enough for rates to remain unchanged, but I noted that they were both insiders. Unusual. I think there was only one instance where sort of Mervyn King lost control of his insiders, if I can put it like that. And just for people that don't follow it, the structure of the Bank of England is that in addition to the governor, there are 4 insiders, and there are also 4 external members. So I think there was a point whereby even those that thought that there would be a rate increase, but there'd be 2 no's, and then the question was, would there be others? I replied to them saying you could argue it's for all, and that the chief economist, Andy Haldane, is a floater, in which case that's very dangerous because he's a loose cannon. Actually, everything he says flares all over the shop. So there's quite a bit to think about for next week, I think, because I think for once, the thing really is all in the air. And now it's a bit more likely than 50-50 that I thought before, simply because he's boxed himself into a corner.
And it's going to be interesting as well, however the decision goes, the overall decision, what Carney says afterwards, and also the publication of the minutes to see what is actually going on with the infighting within the MPC, and that may derail kind of certainly the pound. And what's your take on that? I mean, if we don't see a rate hike next week, does that cause bigger problems now within the Bank of England?
Well, I think it raises a problem on the fact that he's highlighted it so strongly. If we look back to his history at the Bank of Canada, then he did actually raise once, but only once. So there is a sort of possible similarity here. But again, we don't know what some of them will say. I mean, on the other side, it would seem logical for like Ian McCafferty to vote for a rise again. So there are sort of a little bit in that camp. But in the middle there's a few that seem to be floating around rather vacuously. Which way are they? Would they think of one? Would they think of more? So there's a lot of questions. If we move on to the pound, then for the sort of Brexit debate waters seem a little calmer. We've been at a similar level for a while. But the Bank of England could shake this a bit, because it did get a boost from those that thought they might rise. They haven't said they don't, or there's not going to be any more. Or, you know, it's a question of the boy that cried wolf, isn't it? How often can you say it and not do it? Particularly remembering that they did this before in 2016, then it caused cut, but also in 2014. So there's going to be a lot, I think, focusing in on this. And the irony is, if you come to it and you think this through, about what? 0.25% in interest rates?
It's nothing. We're back where we started a year ago.
Yes, and it's interesting to note that some people are presenting this as a sort of calamity, I think there were numbers in the Sunday Times a weekend, it'd be something like £1 million a year worse for mortgage holders, that sort of thing. Forgetting, of course, savers would gain, so you need a net figure. But even so, if we can't take a 0.25% increase in interest rates, then we really are in quite a mess, aren't we? Particularly considering they are only a quarter at the minute.
Exactly. Well, on that note, Shaun, thank you very much for joining us today.